With the markets currently sitting on all-time highs, there's mixed views on the stock market, whether it'll continue going up or down. On one side, there's people saying that this V-shaped recovery is warranted because of all the recovery that's happening in society, and people are pricing in for the future when the economy fully opens up. While in the other camp, people are very bearish on the market because they think there's a second wave coming, or economic data doesn't match up with the current stock market prices. And there's quite a few YouTubers that I follow, and their opinion is that the stock market is going to see a second downturn in it. Whether it be a huge crash of 50% or maybe 20%, nonetheless, there's going to be some sort of crash that comes. If you've been following me and my journey, my opinion is not based off of other YouTubers and what they think. I also form my opinion based off of the news that I read, and also looking at the world around me, as well as the news about the whole virus and how many more cases are appearing in the second wave. So I don't foresee anything good coming out of the economy, and right now I think stock prices have way too much good news priced into them, and they're definitely due for a correction. So stock market crash aside, in today's video what I want to talk about is my prediction for the next week forward. And this is something new that I'm doing on my channel. It's really to help me refine my skills and document my journey in investing to see if I can pull different tidbits of news, piece it together, and make some sort of prediction for the following week. And I very well understand I could be totally wrong, or I could be right. Right now you could say it's a 50-50 chance, and really this is all for fun, so sit back and relax. And at the end of the video, I'll also be going over my Wealthsimple portfolio, which I've been doing on the series already. And I'll be showing you what I've sold in my portfolio to get my number of stocks down from 28 to 25 now, as well as what stocks I'm looking to buy into in the following weeks. So let's get started. So to answer the question of where the market's going to be going next week, there's a few things that I take a look at right now. One of them is the charts. The second thing is looking at news that's happening right now. And the third thing is just taking a look at everything that's around me that I can physically see. So based off of what I know, my prediction for next week is that we're going to see a relatively flat market. I don't foresee any sort of huge downturn because there's still a lot of bulls in the market trying to push the market higher, but I don't see any sort of huge upturn because the economic data right now is not really supporting a higher stock market price. And one thing that I keep in the back of my mind when I'm making these predictions is that the stock market and the economy are linked, but they're not linked by some sort of chain that causes them to move in step. They're linked by some sort of leash is how I view it. So essentially the economy is what is driving the whole stock market, and the stock market has freedom to move around the economy, so it can run up ahead of the economy or fall behind it. And this is because the stock market is trying to predict where the economy is going. So right now, I think the economy is starting to recover or show some sort of good news, and the stock market has ran far ahead of the economy. So we can see that because the stock market is hitting all-time highs. If you look at the NASDAQ, I believe it's maybe a couple percent away from all-time highs, and the S&P 500 is fairly close as well. It's off by a couple percentage points from its all-time highs in February. Currently, with the unemployment rate anywhere from 13 to 19% in the USA, as well as around 14 to 15% in Canada, this can't be good for the economy at all. As well as stores are still closed down right now. There's still a fair number of stores, like I went to the mall the other day. I'd say about 60% of the stores open, while 40% of them aren't. In addition to this, I've seen a few stores that have already closed down because of this pandemic. Restaurants currently in Canada are only offering patio service, so they're not even at full capacity. And on top of this all, the vaccine for the coronavirus is probably not coming out for the next 6 to 12 months because they're still in testing phase. So with businesses not operating at 100% and consumers roughly around 15 to 19% of them are still unemployed, this still isn't very good for the economy. Yes, we have stimulus checks, but at the same time, if people are in stimulus checks, they're less willing to spend because they don't know if they have a stable job to go back to, or maybe they've completely lost their job. So who knows when they're going to find their next job because the job market is not looking good right now. In other news, Apple is closing down their retail stores once again in states like Arizona and Florida. And this is because there's a huge surge in new cases that are popping up. And this happened all due to the economy opening up and more people going out. And these places are typically more sunny. And right now I think people are antsy to get out. So as soon as the government announced that people can start going out, people just rushed out, and that's how it spread. And in these sunshine states that are at risk of a second shutdown right now, and Apple shutting down their stores in these states, Apple is actually a leading indicator in what other stores might be considering going forward, because when the whole pandemic hit the USA and Canada, Apple was one of the first stores to close entirely. So I expect in the coming weeks, maybe not next week, but the week following and the week after that, we're going to see a lot more stores starting to close back down because of the second wave that's appearing. Another thing that's going to impact the whole economic recovery is a change in consumer behavior. And I think people expect that once the vaccine's found, everyone's going to go back to normal. They're going to shop, they're going to line up very close to one another, and stores can be packed like a can of sardines on Boxing Day. However, I don't know if this will actually happen in the next 5 years. It's very possible that people will have some sort of phobia coming out of this whole pandemic, that they won't want to stand that close to another person in fear of catching the next virus, whatever that is. So the shift in consumer behavior will actually change how retail happens. It's possible that we could see the biggest shift in history from in-store shopping to online shopping. So those are some of the reasons why I don't think the stock market will rise to new all-time highs. However, I didn't talk about why I don't think the stock market will drop drastically. And the reason for that is the Fed's still pumping money into the economy. There's talks of another stimulus check coming out, as well as in Canada here, we saw the CERB get extended for another 8 weeks. So with all this federal government stimulus that's happening, this is probably going to continue propping up the economy at the all-time high levels that we see right now, but I don't think it can really push the economy to new all-time highs. And with a lot of retail investors popping up the market with FOMO, and a lot of new retail investors getting into this all, so basically a lot of new money coming into the market, this is actually going to help keep stock prices at its elevated level for the short term. But I think slowly people are going to make sense of all this mismatch between the economy and the stock market, and we will see some sort of downturn. It might be slow, it might be quick. I haven't made my mind up on what I think is going to happen, but stay tuned for this in another video coming in the future. And there's one last thing that I want to talk about with the stock markets is the difference between the Canadian markets and the American markets. Right now, if you look at this chart that I've thrown up, you can see that the TSX is lagging far behind the S&P 500 as well as the NASDAQ. And the question is, why is this? One theory could be that, in Canada right now, we're still a lot more cautious about opening up, and therefore people are not as bullish in Canada because the economy is not going to open up as quick, businesses won't go back to normal operating activity, and therefore, as a whole, the stock market won't recover as quickly. But I dug a bit deeper into this as to why the TSX would be lagging behind the American markets. And I think the real reason is because of the weight of tech in the TSX. Right now, in the TSX, information and technology makes up around 5% of the whole index. If we look at the indices and the exchanges in America, we can see that the S&P 500 roughly has a 25% information and technology weight, while the NASDAQ roughly has around a 50% weight in information and technology. So the US markets and indices are quite heavy in technology. And if you look at technology stocks, these are the ones that are really driving the market to new all-time highs. Look at Apple, Microsoft, Amazon, Tesla, Google. These are all very close or at their all-time highs right now. And versus the Toronto Stock Exchange right now, the only tech companies that we have right now are Shopify, and that's pretty much it. Maybe Constellation Software. And Shopify being the biggest one is sitting around $140 billion market cap versus in the USA, they have at least 4 $1 trillion market cap companies. So roughly we're seeing the same thing happen between Canada and the United States. It's just that the States has more technology companies, which is propping up their stock market, while in Canada here, we don't have as much technology. But if you look at the technology companies in Canada, they're doing very well right now. Kinaxis just hit all-time highs on Friday of $195. Shopify's back at $1,200 per share. So technology is doing well everywhere that you look, whether it's in Canada or United States. So if you're a Canadian right now and investing in Canadian stocks, and you invested in technology stocks specifically, your portfolios are going to mimic the similar performance as if you're an American or Canadian investing in the American markets. And now let's jump over to my portfolio to see what's been happening in it. So currently my portfolio sits at close to $17,000, and really there hasn't been much movement in 1 week. We can see that the count is roughly up by 3.5% this week. So, not bad. But right now, I still haven't broken even yet. And that's because I don't really have a huge weight in technology, and that's what's really pulling the markets up right now. As I mentioned at the beginning of this video, I actually sold off 3 different shares, and here's the shares that I sold off. I sold off my Kinaxis position, and I had 5 shares in this, and I had over a 100% gain on these shares. I bought in around $70 to $77. I don't exactly remember what it was, but it was in the $70 range, and I sold it for $177 per share. And the reason why I sold Kinaxis is because there's a huge run up, and I decided it's time to take profits, and I think the market is going to have a second downturn, so I'm sticking to that thesis and selling out because of that. And if you guys are looking at Kinaxis stock right now, yep, it's trading at $195. And do I regret selling? No, not really, because I did make a handsome gain in it. And right now I have cash ready to deploy if we see any sort of hesitation in the market, and it drops by anywhere from 10 to 20%. And other shares that I sold off was Morneau Chappelle and OpenText. And if you guys watched my previous video on 15 growth stocks in my portfolio, I did mention I was going to sell these both off. And I did. And the reason for that was I just don't have enough time to keep up with all these stocks in my portfolio. And I'm looking to liquidate some of these positions to consolidate the portfolio, as well as raise cash right now as the market is being propped up. So now that we're done talking about what I've sold in the stock market, let's talk about what I invested in. And the first thing I invested in was the like button. So smash that like button. Although I'm bearish on the market right now, I still am continuing to buy stocks, but relatively slowly. And there's only certain stocks in my portfolio that I'm willing to average in at these prices right now. And here are the stocks that I bought since May 20th. I bought some Drone Delivery Canada, 250 shares to be exact. The reason why I bought some Drone Delivery Canada is because the price that it's sitting at right now is roughly around my cost basis. And there is a lot of tailwinds from this whole pandemic that's going to play in the favor of this business. For one, their drone delivery is contactless. So basically a company can just put a package into the drone and the drone will fly off and deliver it to the destination. And there's no contact between the supplier and the buyer. I also bought some more shares of Well Health Technologies, and to be exact, I bought 59 shares of Well Health Technologies. And if you guys haven't seen my video on that and why I'm bullish on Well Health Technologies, you can go check that out. And that's why I continue to buy more, even though they're at all-time highs right now. The next shares that I bought was Chartwell Retirement Residences. And the reason why I bought CSH is because they have a huge tailwind playing in their favor. And that's baby boomers are aging. And when baby boomers age and eventually become, the clients of these retirement residences, Chartwell is one of 3 major companies in Canada that they'll go to. So this is really a long-term play. In the meantime, right now, while prices are low, I'm trying to snag it for the dividend yield. I also bought some more Canada Goose, 10 shares to be exact, and I bought this on 2 different occasions. And Canada Goose actually reported some great earnings recently, so they didn't lose as much money as analysts predict, which is a good sign. But they didn't actually see as big of a recovery as other stocks such as Lululemon, Nike, and Aritzia. So I think Canada Goose still has a lot of pressure because they're seen as a luxury goods retailer, and especially winter gear. I don't think people are as bullish on winter gear, but for me, I see how Canada Goose is operating and how they're very innovative in retail that I'm willing to buy in at these prices right now, and I think I'm getting these shares at a steal. Once the economy opens up and their China expansion really plays out, Canada Goose shares are going to the moon. And just so that you guys are clear, this is my opinion. Don't invest because I'm saying Canada Goose is going to the moon. Do your own research and have your own convictions. And the last stock that I purchased in this period is Manulife. Manulife is one of the most stable companies in Canada, and right now their share price is fairly low. It's actually under my cost basis of around $24, so I decided to average in and buy it around $16 per share, which is pretty good. And I'm doing it because I know they have a good solid dividend yield and that they'll probably continue paying this in the next following years as we recover from this pandemic. So what am I looking to buy right now in my portfolio? So the first stock I'm looking to buy is some more Sienna Senior Living. And the reason for this is because just like Chartwell, they're a retirement residence. And I think these have a great tailwind to them. And I'm buying them because I'm currently down quite a bit on this position. I'm down about 50%, so I'm trying to average down my position. And I have no doubt in my mind, 5 to 10 years from now, this stock will recover and actually be at new all-time highs because of the baby boomers. I'll also be looking to buy more Well Health Technologies because the stock price is starting to come back down from its recent all-time highs. And those all-time highs happened because of the latest earnings report. And there's a lot of investor hype. But I think this company will continue to grow. And when they report the next earnings and the next earnings and the next earnings, I think the stock price could actually go back to all-time highs or surpass them. But as people are selling off their positions because they see the stock price is dropping slowly and they're just trying to take profits, I'm going to take advantage of this and buy more shares. And as I told you before in my 15 growth stocks, I'll be loading the boat if Well Health Technologies comes back down to the $2 level. And the last stock we're going to talk about is Cineplex. As a previous investor in Cineplex, I sold it around $34 when the whole Cineworld deal was a thing. But recently, as you guys know, Cineworld no longer is buying Cineplex. And we saw the shares drop drastically from $13 all the way down to $10. And the reason why they were at $13 instead of $34 is because investors saw a huge risk that this deal wouldn't go through, so it sold off when the whole pandemic hit. So now that Cineplex sits around $10, I thought maybe it's an intriguing buy because I do like the business and I think that entertainment could recover. And with the shares trading at such cheap prices, maybe it's a time to buy in and swing trade it up. But after taking a look at their financials, I decided, no way. I'm not going to invest in Cineplex. Although they are planning to reopen, I don't know if a lot of people are going to go to the movie theaters. And the fact that their current assets are less than their current liabilities, this is a huge red flag to me. And I don't think Cineplex is going to be able to repay their liabilities and are at possible risk of going bankrupt. And currently at the rate that the Canadian economy is reopening, I think Cineplex is at a high risk and I won't be putting any of my capital into the stock at risk of it going to zero. So let me know what your thoughts are on Cineplex down below in the comments. I'd love to hear your opinion as well. And before you go, remember to leave a thumbs up and subscribe if you haven't done so already to keep up to date with my portfolio and what I'm doing in my investing journey. Keep up the grind and have a great day.